Okay, welcome back. You're with us here on Open Exchange. We're coming to you from the CNBC-TV18 Motilal Oswal studios. We got you the technical trading ideas. Let's go on to the futures and options side of things as well. Sneha Sheth is derivatives research analyst at Angel One, and she's joining us now to tell us what trades to take on futures or options. Sneha, hi, morning. How are you looking at things, and what trades would you want viewers to put on?
Very good morning. If you see market in last couple of sessions, it has been in a consolidation mode, wherein it has certainly lost its charm recently, what we have seen. Now, at present, if you see 17,500, 17,550 becomes a very important support. And on the higher side, any sustainable move above 17,700 shall bring index towards 17,800, 17,900 zone. So this is the range for now, 17,500, 17,700 on the higher side. In case of banking index, 42,000, 41,800 is the immediate support zone. And on the higher side, and if you see the on the higher side, 42,500, 42,600 remains an immediate resistance. And any move beyond this will bring the banking index towards 43,000. So at present, the index may remain in a range.
All right. Thank you, Sneha, for that. Thanks for giving us that view. Let's move on now and talk about HCL Tech. The company reported a steady quarter with earnings in line with estimates, so there were no negative surprises, which is a great thing. And the management delivered better than expected revenue growth guidance. Reema caught up with HCL Tech's MD and CEO, C. Vijay Kumar, and the CFO, Prateek Agarwal, began by asking them about the quarter gone by and how they see growth going ahead. Listen in.
The year started very well. Second half has been a little soft. And in spite, if you compare it to our expectations, the couple of verticals, tech and telecom, primarily in our engineering and R&D services, the revenues came lower. Maybe about $20 million came lower than what we expected in engineering and R&D services, and that was mostly attributed to the tech and telecom verticals. As we move forward, I do think most verticals have stabilized, but one thing I want to call out is based on the rigor of execution and the ramp-ups that we have done for some of the large deals that we won in financial services, we expect FY24 to be a very strong year for financial services. And in the mix of business that we have very, very negligible exposure to smaller banks. And we have a very good mix from banking, capital markets, and insurance. And insurance is a segment which is impacted by inflation, and we see significantly large outsourcing opportunities in this segment.
You said you have negligible exposure to the smaller banks. Can you tell us what percentage of your BFSI portfolio is exposed to the US regional bank and maybe even some of the troubled European banks?
Yeah, see, our revenue in BFSI is about 20, and last quarter was about 21%. And of that 21%, only 1%, less than 1% is exposed to smaller banks and the bank that you are referencing. And even within that, there is a run this business spend and the change. So it's really negligible.
So 1% of the overall BFSI portfolio or overall?
Overall BFSI portfolio.
Got that. Prateek, in the press conference, you all said that your aspiration is for 19 to 20% margins. Though for FY22, you have guided for a margin range of 18 to 19%. Can you tell us why you're not confident about achieving that aspiration range this year? Because the supply side situation is improving rapidly and your growth is also going to be fairly okay at 6 to 8%. What would be the margin headwinds to your mind, and take us through the guide path for achieving your margin guidance?
Sure. Thanks, Reema. That's a good question. So let me take a few minutes. I think, first of all, margin expectation and aspiration for the medium term continues to be fairly squarely in that 19 to 20% band. That is the number. 19.6% is what we achieved in FY19 and FY20. So that is what we definitely want to get back to. And like I said in the analyst call yesterday, it is not a question of whether, it is a question of when. Having said that, I think this year definitely has those tailwinds that you talked about in terms of the supply side easing a little bit. But then there is this volatility and uncertainty in the environment that we do need to factor in. And, given that, we've probably got a little used to growing at 14, 15, 16% in a services business. From that perspective, 6.5 to 8.5, though it is good for the current times, doesn't give us the operating leverage that we really need to sort of keep on increasing margins. So all that has been factored into the guidance, and we expect to be within the guidance. And if things do turn out well on the environment, who knows? We could probably beat it as well. Who knows? Fingers crossed.
Okay. Point is taken. CVK, any project cancellations in Q4?
No, nothing to call out. It's normal things here and there. Some cancellations happen, but it's very small.
CVK, is there a risk that pricing will come under pressure in FY24 at some point in FY24? If all the clients or most clients are gearing and veering towards cost optimization deals, they are going to be trying to squeeze costs on all fronts, which also indicates the kind of money that they give to technology vendors. From an industry point of view, do you think pricing discounts may be something we will start seeing in FY24?
We've had one of the best renewals in the last year, right? Almost 99% plus revenue we renewed. Whichever was due for renewal, we renewed. And if you look at the whole IT spending, there are multiple elements. And when customers want to optimize the spend, there are still many other areas like software, like the hardware and the in-source spend and outsource spend. Between the four categories, I think there are opportunities in every place. And the outsource spend, I think customers are looking at how can they get more for same or more for less kind of operating model. And they're looking at right shoring, they're looking at higher efficiency measures. And when we provide them those productivity benefits, we're also equally focused on how do we kind of drive that productivity. It does not impact our realization and our overall profitability. How can we constantly be after the automation programs which really delivers those cost savings for our customers? So at this point, there's going to be pressure for sure in this environment. Customers will expect when renewals are coming, they may have a higher expectations, but there's equally good technology toolkit that's improvising for us to help achieve those productivity targets.
So customers are asking for discounts.
Yes. When there is a renewal, obviously there is an expectation to look at higher productivity and higher efficiency, and it's a part of the game.
So like to like last year, were there any pricing discounts?
No, last year, in fact, we were able to increase prices. Our billing enhancement program that we put in place delivered almost 115 million, which is 1% improvement in our margins was attributed to the billing rate increases that we had from our clients.
Got that. Prateek, your hiring target for next year is at 15,000, and this would compare with about 26,000 freshers that you hired in FY23. Can you tell us the reason for that? How much, bandwidth do you have on your existing bench? Is there scope to improve utilization? And do you think increasing productivity, tools like generative AI, may be one of the reasons why companies from here on will start lowering their hiring targets and requirements?
Right. So that's a number of questions. I'll try and make sure I answer each one of them. So Rima, there are those 3-4 factors which go into deciding the number of freshers that we want to hire next year. So automation, more and more automation, and the oncoming of the new AI tools like ChatGPT or Copilot or others like Bard, etc. There are other factors like, number one, the gross hire requirement itself of the company is going to come down. There are two factors that basically drive that. Number one is the attrition. So you would have heard that our attrition in the March quarter this year was roughly about half of what it was in the June quarter last year. So compared to Q1 to Q4, there has been a sharp drop in the quarterly attrition. And therefore, the need for more people to be hired to replace that attrition backfill, as it is called, it comes down. The second thing is, obviously, we grew at 15.8% in our services business last year. And now for this year, the growth guidance is, if you take the midpoint, say 7.5%, it is less than half of the 15.8%. So that also brings down the gross hiring requirement.
All right. Well, that was the commentary coming in from HCL Tech. And for starters, the stock is going to open up in the green with a gain of around 1.6% odd. It's 9:10, so let's get Mitesh back to give us his 9:10 call. Mitesh?
I'll go with a buy on Bata India. I think after a long time, it's giving a reversal. Keep a stop at 1444. Look for targets of 1490.
Okay, all right. Thanks a lot for that, Mitesh. Let's move on there. Nimesh joins us to run us through the Standard Brokerage report for the day. Morning, Nimesh.
Morning, Nigel. Today's Standard is on Jubilant FoodWorks. UBS has to upgrade the stock to buy from neutral, and they've written a target price of 600 rupees. Now, UBS believes that the current valuations at 40 times FY25 earnings, a 30% discount to 5-year average, are attractive given the growth potential and the limited downside risk from here on. In fact, UBS believes that Jubilant should continue on growth trajectory on the back of aggressive store additions, regular capex to strengthen the supply chain, focus on new brands, superior operational efficiencies, use of technology, and better value proposition. So, given that the stock is corrected 15% this year and is down 30% in the last 1 year, UBS believes that there is the valuations have turned attractive and it's a good entry point, and hence they've upgraded the stock to buy, and they've written a target price of 600 rupees on Jubilant FoodWorks.
Okay, right. That's interesting. So 600 rupee target price on Jubilant FoodWorks. Let's get Mitesh into this conversation. Mitesh, you think there's more upside on the stock, Jubilant FoodWorks? Any thoughts here?
I think, Jubilant is very similar to the stock I discussed right now, Bata India. I think it's doing a good base building after a decline. We have seen 420 and 450 emerge as the range. And I think once it starts getting past that, I'm not sure about a 600 plus level, but a 530 could be a good trading target.
Okay. Mitesh, any thoughts on Mastech, which was the big mover yesterday, ended about 12% higher? And how are charts on these innerwear companies looking? I mean, Lux, Rupa, there was, I think, one more yesterday, which was Lovable, another one. Actually, there are 5 or 6 of them listed.
Yeah, all of them.
And all of them were jumping. I don't know if you've looked at the charts here, all cash stocks. Mitesh?
So actually, I have Page as my recommendation today, but the others unfortunately haven't looked at them. Mastech was on the radar. I think big breakout with the gap. It managed to get past the 200 average. The weekly average was also being crossed. I think this has triggered an uptrend with a target of around 1950, and in a good chance 2100 also can be done here.
What happened to Liberty Shoes, Mitesh? 20% higher yesterday. 260. Does it pop up on your screen?
It does. Again, I think, a very similar kind of setup which was there on Mastech. Big price volume action, 200 average being cleared, weekly average has been cleared. So I think, again, this is also a stock gone into an uptrend. The upside target should be around 287 as the first pivot, and then possibly 300.
Okay, we just have a couple of minutes to go before the pre-opening rates, before the market opens for the day, and the pre-opening rates have settled largely flat. If we can get the Nifty up on board, absolutely quiet actually. The sensex has a little bit of a negative bias, but the Nifty is very, very quiet. Tech Mahindra and Emphasis on our radar this morning. Reema is joining in to tell us why. Reema, over to you.
Thanks so much for that. So JP Morgan has downgraded both Tech Mahindra and Emphasis from a neutral rating to an underweight rating. For Tech Mahindra, the target price now stands at 900 rupees, and for Emphasis, it's been lowered to 1,550. They're saying the key reason is, based on the numbers from Infi, TCS and HCL Tech, there are pockets of trouble. BFSI, retail, high-tech, telecom, these sectors have seen either projects getting ramped down or cancellations or even some deferrals. And both these companies, Tech Mahindra and Emphasis, which have been flagged off by JP Morgan, have a high exposure to these troubled verticals. So Tech Mahindra has a 40% revenue coming in from telecom, 10% from high-tech, which basically means 50% of their revenues. From Emphasis, 60% of their revenues comes in from BFSI and 13% from high-tech. And therefore, there is a risk to revenues and margins for Tech Mahindra and Emphasis, which is why JP Morgan has lowered the revenue and the margin estimates for both these companies for FY24 and FY25. So lowering the projections for both these companies, which is why they have downgraded the stock to an underweight from a neutral rating. Back to you.
Okay, thanks a lot for that, Reema. So just counting down to the opening. Now, if Mitesh is still with us, Mitesh, quick thoughts on these two stocks, Tech Mahindra and Emphasis?
See, the IT stocks, they have been behaving very differently depending on the numbers which they have thrown up. And if you look at Tech Mahindra, I think, with the gap down, it's come near to the support area of 987. If it holds that, I think it's doing a range of about 987 to about 1150. But if it breaks that, then we'll look at a test of levels around 900. The Emphasis I'm not covering, unfortunately.
Okay, that's fine. So we're heading into market opening, so I'll come back to you, Mitesh, in a bit. The first tick on the index seems like it could be very flat. At least that's what the SGX Nifty, the pre-opening rates are suggesting. There you have it. Nifty absolutely quiet, just about 15 points in the green. The sensex down about 90 odd points. So we'll wait by for these rates to settle. Very quiet across the markets as well. The Nifty Bank is flat. The mid-cap end of trade is also quite flat. And not too much happening. Only the IT index is dragging a tad bit, but nothing alarming at the moment. HCL Tech is actually a big mover on the upside, so just keep an eye out on that. A couple of other large movers include Wipro, Divi's Labs, L&T Tech. Those are, the stocks that are taking the markets higher this morning. There's also a couple of banks. Axis Bank is trending in the green right now. Bajaj Finserv, Adani Enterprises are all looking pretty good. Let's also check out what's happening with the two companies that announced their numbers. There's Reliance Industries in the evening and ICICI Bank tomorrow. Both these stocks, of course, the volumes could pile up. Reliance is in the green right now, up 0.3%. Decent set of numbers expected, while ICICI Bank is also trending in the green, could be one of the big movers over the next couple of days on account of its numbers. So these are pretty much the stocks that are moving around. The mid-cap end of trade is slightly in the red right now, but nothing alarming, just consolidating. A couple of stocks in the broader markets include ICICI Pru, which are in the green, Zomato. HCL Tech, by the way, is now piling on the gains. So there were no negative surprises in the numbers this time, and the street definitely liked that. After Mastek's numbers yesterday, which were very good, and HCL Tech numbers not so bad, the street is now getting a little more sanguine on the IT names. But let's see.
Cyient, that's the big
Mastek of today.
Okay.
Cyient is up 8%.
Oh, absolutely. And, you want to take that forward, Nigel? Anything else that sort of stands out in the broader market?
Well, that's right. Science, the start of the day, that's up close to around 8% odd. In the next few minutes, we'll have the management as well who will be joining us on the channel. But besides that, you have RBNL, well, the consortium between Siemens and RBNL, they have tied up with the Gujarat Metro Rail Corp for rail electrification tech. So that's up close to around 2% or thereabouts. ICICI Prudential, now these numbers look good. Just reading a brokerage note, they were pointing out that they were losing market share, but Q4 numbers, that seems to have been turned around as well. So we'll have that management as well in the next 20 minutes or so who will be joining us on the show. HCL Tech, well, that stock continues to hold well in the green. And HDFC Life, Yash had told us earlier today that the operational update looked quite good. And that stock, in fact, is up close to around 1.7%. It could be a factor because of the changes that we saw in the budget that towards the end of the year did see a bit of a bump up. But for the time being, HDFC Life from the insurance pack is doing pretty well. So good going on that one. Over Realty, let's see how that stock's reacting. The operational update came in there, got a big bump up because a couple of clients actually had gone ahead and picked up a huge number of flats. It looked good, but maybe stripped of that, the street expected a little bit more. So the stock is down 1.5%. Prashant.
So it's a 30-point higher start right now. 17,651 is where we are at. Just two more names I'll add to the list, which we've already mentioned. One is, I was just highlighting Liberty Shoes, which was locked up yesterday on the daily circuit. It was up 20%. It starts another 7% higher. So something going on there. So keep an eye out on that one. Kamath Hotels is another one which is up about 5% or so. Nazara is up about 3%. Borosil Renewables is up about 2.5%. Delivery is up about 3% or so as well. So this is the list of what is doing the best across the board in the market. And on the downside, I mean, volumes are still picking up. But if I have to pick one name, it has to be SW Solar, that's Sterling and Wilson Solar. That is down 6% on fairly large volumes for this time of the day. Stocks at about 289 right now. So that's the market for you. The Nifty, not very much. We are just about 27, 28 points in the green. Our market master of the day is with us here in our studios. Sridhar Shivaram is Investment Director at Enam Holdings. Sridhar, great to have you with us here on the program.
Thanks for inviting me.
Thanks very much. How are you feeling about the market, Sridhar, first up? Near term, near to medium term?
Nothing much has changed. Our view is still cautious, given the macro is the bigger challenge, not only for India, I think more globally than India. We are seeing some improvement in the macro, but our view is for 6 months, maybe another 3-4 months, the dust will settle. We'll get more clarity on how Fed is moving, how RBI is looking at inflation. We don't see US inflation below 2% in another 12 months and Indian inflation below 4% for another 12 months. So those are the two benchmarks that you have to look at. So basically you're talking of
but
higher.
4 plus minus 2, right? So
yeah, so it has to go below 4, right? For them to cut.
For them
so you're talking of higher for longer, right? So the rates are so you can't cut if it's still above 4.
I was saying holding here.
Of course, you can hold, but you're still talking of higher rates.
Yeah.
Okay. So those are the challenges. Typically, when rates are higher, they're not great for for global markets. Yeah. So we'll see how it plays out. I think you have to look at more stock specific. I mean, that's how we are seeing the markets.
Okay, so that's our cue, right, to take it forward. Sridhar, hi, good morning.
Good morning.
I have so many questions to ask you, but I want to ask you the comment that just came in from HCL Tech a while back.
Sure.
Where he said that hiring requirements are coming down because of lower attrition and lower growth, and AI tools are one of the factors in improving productivity. And this is a discussion we were having as to how AI disruption is taking away a lot of jobs, especially in the tech sector.
Yeah.
Hopefully not ours, but you never know. How are you as an investor approaching all of that?
Yeah, so I think on the tech sector itself, our broad view was that given the slowdown in US and Europe, it is better to be a bit cautious, underweight in the IT sector. That's what I had mentioned, that I will wait for the guidance for the coming year. We haven't seen great guidance as far as tech sector is concerned. Some companies have done better than the others, but generally I would say it's softer than what I would have expected. But I think the bigger challenge that we've been debating internally also for a while is that how does this whole generative AI disrupt various industries, and one of the industry that we think could get disrupted is the Indian software industry, and more because of the ease of coding. So coding is becoming very easy if you are using a generative tool, and just recently Amazon also has jumped into this, and they've launched something called a Code Whisper, which is basically a tool for coders to do their coding, and it becomes so much easier. So what I have read, what I have spoken to people is that what 30 people could do now using a generative AI, maybe 1% or 2%, they could do much faster. How does this play out? It improves productivity, but you require so many lesser people. And one of the advantages for India as an IT is that we have a lot of IT professionals, you have a lot of engineers. And sadly, the entry-level salary for them is closer to 4.5 lakhs. Even today, if somebody joins TCS or Infosys, they get not more than 4 lakhs per year. I mean, there's a huge labor arbitrage which India enjoys. I think this is where the disruption is happening. And I think companies which are able to disrupt themselves will possibly come out as winner. And companies which are slow in looking at what is happening on this AI space may lose out. So this is a space that has to be watched very carefully. I think there's disruption already going on based on whatever I hear.
As an investor, what do you do here? If you already have investments in, say, an Infosys or TCS, do you sort of churn out, or do you think it's a good thing because if they have to hire lesser people, the cost will go down?
Yeah, so I think there are two ways to it. So if you look at Indian software industry, they're based on per man-hour billing. So if you're using lesser number of people, that means your billing is going to be lesser, your productivity is going to be better. On the flip side, if my client knows I'm using AI, will they be giving me the same billing rate? I think the answer is no. I don't know the exact how much reduction it will be. But I think it's too early to say, but I think something is happening here because so many companies have jumped into this generative AI, especially for coding, because it becomes so much easier to code. Almost 40 to 50% of Indian software industry employees are in the 1 to 3 year band in terms of experience. So you have a large part of the Indian software industry who are basically doing very low-end work. Maybe that gets disrupted. How this impacts the software industry. When I look at the Infosys guidance of 4 to 7%, didn't add up. And you look at the number of software employees on a quarter-on-quarter basis, it is down by 5,000. So something is not adding up here. Maybe, as some companies have already indicated, that productivity will go up. They'll need lesser number of people. How this has an impact on top line and profitability, only time will say. I'll continue to be underweight.
All right. Hi, Sridhar. Good speaking to you as always. Sridhar, I had this query to you about asset allocation right now.
Sure.
You have always told us that some allocation to gold is a must, right?
Yeah.
But from now on, for someone who's going to be earning for the next, say, 20 years or so, and they want to deploy fresh money, what should be the split up between equity in some form, either stocks, SIP, as well as gold? What should the asset allocation be from here on?
So, given that financial investors allocate so little to gold, my general advice is at least first come to 10%.
Okay, 10%.
You can look at it afterwards. So this is an interesting number that, not too many people know. In the last 20 years, gold has had only 3 down years, which is 3 negative years in the last 20 years.
Yes.
So it's been a very stable, return asset class, despite the fact that people just don't want to invest, especially financial investors don't want to invest. As I always say, that it's a hedge against the currency. People just don't realize that our currency continues to depreciate 3 to 4%, and this is the best hedge against the currency. So I would say at least start at 10%, and based on your age, I mean, the younger you are, the higher should be your equity allocation. That's how generally it goes.
Yes.
Sridhar, you still very bearish on life insurance as a space?
Yes, I am. And I can
More
tell
bearish
you,
or
no, so I'll tell you. So look at what the government has been doing. Look at what happened to the debt mutual funds. I mean, they're plugging every loophole as far as tax arbitrage is concerned. So if you ask me, there is only one instrument where tax arbitrage is still there, which is 5 lakhs for a par or non-par instrument in life insurance and a 2.5 lakhs for ULIP. Now, I know that the mutual fund is up in arms with the finance ministry that a mutual fund doesn't get any tax-free benefits, whereas a ULIP investor still gets a 2.5 lakh tax-free benefit per year. I think it's only a question of time that this 7.5 lakhs for life insurance also goes. I don't know whether it's next year or year after that. If these companies are able to change their business model to a model which is more selling protection and not tax-free savings product, I think I'm happy to look at it. I mean, different people have different views. My view is that they're still using tax arbitrage. They're not really selling insurance.
Okay, fair enough. I just had one follow-up question to the IT, argument, because we have the management of Cyient that's joining us in just a while from now as well.
Sure.
And, Cyient is a company that is getting into new growth areas, whether it's automobiles, semiconductors, high-tech, medical. Okay, growth is slowing down in these areas because of the challenges globally, but there are companies that are, making that shift.
I agree with you.
How do you separate the men from the boys?
Yeah, so I think you have to look at, it's like pharma. So if you look at, say, pharma companies today, if you look at just the Nifty itself, you have a company which is in the top 3 performer and you have a company which is in the bottom 3 performer. Both are in the pharma industry. So I think it's becoming very stock specific that people who are able to disrupt themselves and adapt to changes faster will be winners. And I think that's where the skill of the fund manager will come. It's not easy now to say, I'll just buy IT and you just buy the top 3-4 IT companies and sit. Maybe the disruption is too fast for people to, take that sort of view. This is my personal view. I could be totally wrong, but this is how I'm reading what is happening. And changes are happening every day. So obviously, it's quite difficult to adapt to the changes.
Sridhar, what about defense? That sector has come to the limelight. There's a lot of focus out there, a lot of expenditure. And some of these stocks that are listed as well, they have come to life. Just to give an example, Bharat Dynamics, it came at around 300, 350 rupees IPO. No one was really interested. I think the stock corrected 25%. From there, it's up nearly around 4 times. What's your view on the defense space from here on? Do you think that's still a space that can do well?
Yeah, we are quite bullish on the defense space. I think the government spending on defense is continuing to increase. Also, the government's focus on the offset clauses, which is creating more companies, more employment, many of these foreign companies are now forced to produce 30% at least locally, which is creating opportunities for many companies in India. So broadly, I would say we are quite bullish on the defense space. We like that space, especially given that manufacturing is also, getting some sort of a boost because of the Make in India.
Sridhar, just to come back to that AI point,
sure.
right? I mean, and we're talking about just large language models, AI, chat GPT, so we're not talking about general intelligence, right? AGI, which is like the ultimate thing. Do you think markets go into these phases of overestimating the impact of something new which comes up, right?
Yeah.
We had this, the metaverse, which took the world by storm, and nobody talks about it anymore. I don't believe this is one of those, but is there a chance that we are kind of overestimating the impact of what is...
It's possible, Prashant. It's too early to say this is what I said. But given the investments that are going in and as I said, Amazon was not there, and they've launched an AI tool specifically for coders. It's called Code Whisper. So obviously something is happening. So I think it becomes easier where there is a clear logic, and these AI tools are faster in developing something else. So I think coding, you broadly know there's a logic, this is how you have to do. It's become so easy that you don't even need to know the coding language. You can just give your general view.
Write
a code on this.
Python and it writes it
and everything comes down. And then all you need to do is I'm not a coder, so I'm not an expert on this. But speaking to people, what I've understood is that it's become very easy. And this is where the disruption is, which is at the lower end to start with. And people who have a lot of work on the lower end will see some disruption. People who are at the higher end will see lesser disruption. So that's how I'll put it.
I think it's the way you prompt, right? The prompts that you use, and that's the way you work on ChatGPT, and that's the right model.
So now levels above ChatGPT have come, which is the
things are changing every day. But thank you so much, Sridhar, for joining in, and have a great day. Have a good weekend. Let's move on. One of the big stocks in focus this morning is Cyan. The company has reported a very strong growth in revenues and margins. Over 8% growth is what they reported. Something we haven't seen in a while. Their FY24 guidance is in line with the constant currency revenue growth, seen at 15 to 20%, and margins are seen rising by 100 to 200 basis points. Krishna Bodanapu, the Managing Director and CEO at Cyan, joins us now to discuss more on their Q4 performance. Mr. Bodanapu, thanks a lot for joining in. This is a very good set of numbers that your company has reported. So I want to, of course, get to the numbers as well. But before that, there is a $1 billion revenue run rate that you had laid out for by the end of FY24. Are you on track to doing that, or do you think that because there are some, macro challenges, it would be a tall ask?
So good morning, and thank you for having me on the show this morning. That target still is in place. We believe that we have a line of sight. Of course, we've taken into account some degree of macro uncertainty, which we all can't escape. But taking into account some degree of macro uncertainty, we're still quite confident that we have a run rate towards that number essentially in Q4 of this financial year. There is still a lot of work to do, but we believe, will we be there? Surely thereabouts, but we're working hard towards getting there. So that's still a line of sight.
So the reason I asked you this is because, a lot of companies, your larger peers, have mentioned that there are some scale downs in terms of client spending. Some of them talk about deferrals. Some of them even talk about cancellations. Are you seeing any client cancellations from your end? And if yes, in which vertical?
So I'd say no more than usual, right? There's always ups and downs in any business, and our business is no different than the usual ups and downs. And we continue to have those. And those are always anticipated when we do a budget or when we do any outward view that we give. I'd say those continue. There are some obvious risks in areas like semiconductors where there is a slowdown that is anticipated. But I would say, I think now we have a well-diversified portfolio. If you look at the 4 reporting sectors that we have, which is transportation, sustainability, connectivity, and new growth areas, they're all very balanced. I mean, they're all, a fourth each of the services business. Or if you add the manufacturing business, that's also about the same scale. So these 5 pillars that we have I think are working out very well. And let's face it, right? There were times when some of the sectors that we were in did not perform very well compared to the others in the market. And I'm referring to the aerospace sector here particularly. But now that sector has come back quite strongly. So I think we've positioned ourselves quite well. And what I'm exceptionally proud of is the fact that we've diversified our portfolio, especially with sustainability, with the CTech acquisition has become a big part of our business, and that's doing very, very well.
All right. Hi, good morning, Mr. Bodanapu. Since you mentioned about that acquisition, the inorganic growth has been helping the overall growth as well. So we have taken your guidance of around 15 to around 20% for the coming year. My question to you is, how much of that will be from these acquisitions? I think last year it was, in teens, in double digits, I think was the contribution. For FY24, what is the contribution that comes in from these acquisitions that you've done?
So the way that we've done our budgeting and the way that the business is run right now, the acquisitions are very integrated into the rest of the business. So rather not common to say that all cylinders are firing, essentially. It's not one or the other. The core services business or the services business that existed in Cyient is doing well. The acquisitions are doing well, so it's a well-balanced growth. It's not because of these. And also, if we look at a like-for-like number, because acquisitions are now also part of the base, the growth is overall not one or the other. It's just, I just want to reiterate that 4 pillars of services are very, very well-balanced right now.
Mr. Bodanapu, morning. Margins will be between 15 and 16%?
Yes, there's 100 to 200 bits improvement, correct.
On a normalized level, right?
That's correct.
Right. Just at the margin, and this is what we were discussing with our earlier guest as well, who was talking about how why he's an investor, not very bullish on IT services, largely because of all the developments in AI. I'm not sure how much of that conversation you heard. Are we overestimating the impact here, or you think it's going to take time? What's your sense?
See, my favorite saying is people always overestimate the short term and underestimate the long term. Yeah, in long term, there is going to be a fairly significant change in the way we work. But in the short term, I think, ultimately, AI is nothing but a software application at one level. And it is going to require a lot of people to start codifying it and testing it. And, again, you can't rely on AI for everything, right? It has to be tested. It has to be codified. It has to be validated. So at least I would say, in the long term, I'm sure, many things have been disruptions. And if you look at the technology and even the Indian IT sector space, for example, anytime there's a new disruption, people write us off saying that's the end of the Indian IT sector, but we won't. And the way I look at it, AI is also the same way, right? A lot of us are using AI very effectively. I think your guest also mentioned that on the lower end, there is going to be disruption, but on the mid and higher end, it's actually a huge benefit because that's where the domain expertise and the knowledge that has to be codified into AI really comes in. So it's really an opportunity, and I'd say we're one of the most resilient sectors. So we'll be fine.
Oh, absolutely. Kudos to all of you for staying relevant in a market that is disrupting by the hour, right? Forget about by the year. So it's not an enviable job at all. But just one final question. You have new growth areas that you've gotten into, and I understand 20% of your business now comes from these new growth areas, whether it's semiconductors, high-tech, automotive. There's been a bit of a degrowth over there this quarter. Can you help us with some trends that you're seeing in these new verticals?
Yeah, absolutely. I think there is a lot of disruption in these areas, and that's why, a couple of years ago, we made the choice to focus on some of these areas, including semiconductor. Just the usage of semiconductor in various industries is growing exponentially. Or you look at automotive, where the disruption in technology is really, it's really once in a lifetime, from the shift from sort of mechanical cars to electronics to now electric. So I think there's just a lot that's going on in these areas. And the opportunity that we see is to bring our knowledge and domain expertise. And that's why we've invested quite aggressively into these areas and will continue to do so. And that will be one of the key growth drivers for us.
Very quickly, what about the DLM IPO? I think, that's seen some headway. When do we see that?
I believe it will be by the end of March. That's all I can say. Unfortunately, I've been asked not to talk about it because that's...
End of this fiscal?
No, end of May, sorry. End of May.
End of May. All right. Got that. Thanks so much. Congratulations on a good showing. You're sounding rather confident as well on the way ahead. So wish you well, and we look forward to chatting up with you sometime during this quarter. Well, for the time being, slip into a short break. But on the other side, we'll focus on ICICI Prudential Life's numbers. Management will be joining in to focus on that. Later on, we'll have our clutter breaker. Rima will talk about the general AI, a risk to tech companies. Well, we'll find out more. We'll have a couple of guests who will be joining in. Ankur Rudra of JP Morgan will be joining in. We'll also have someone from IBM Research who will be joining in. Stay with us.